One of the key parts of your membership with Property U is the monthly edition of Terry's Tips, in which I try to alert you to snippets of information that are invaluable to know if you want to be successful with real estate. One of the lead items in this month's edition of Terry's Tips speaks about one way that you can identify which of the major cities is going to be the next growth centre. It's really a case of being aware that one of the key indicators is what's going on in the local economy, not the national economy, what's happening in the local economy, the state and territory, or the capital city economy. What we've seen in recent years is that New South Wales and Victoria have been the number one and number two economies in Australia, and not by coincidence, Sydney and Melbourne have been the leading property markets. So more recently, we've seen improvement in the Tasmanian economy, and as a consequence of that, we've seen Hobart rise up the ranks, and right now it's the hottest market amongst the capital cities with the leading price growth and houses selling in the shortest time frame. So where next? What does the economic data tell us about where next? Well, one of the things we've seen is that the Queensland economy, which for a number of years was showing negative figures, is now again in the last couple of years showing positive growth figures, and that bodes well for the Brisbane property market. We've also seen the Western Australian economy, which had several years of negative figures in terms of growth, now returning to growth in 2017, and as a consequence, we're starting to see recovery in the Perth property market. And we've also seen in the last 4 years, the rate of growth in the South Australian economy has increased in each of the last 4 years, with a particularly strong performance in 2017. And we're tipping that Adelaide's going to be one of the growth markets in 2018 and beyond. We also talk about an emerging factor in property markets. A lot of people think that you get the best capital growth in capital cities, and a lot of investors underrate the potential of investment in our regional cities. Well, that's not always true, and we're now seeing a turnaround in the rankings whereby collectively the regional markets are outperforming the capital city markets. And in particular, there's a number of regional cities, particularly in New South Wales and Victoria, which are the outstanding markets in Australia. There's probably nowhere in Australia that's had more price growth, higher levels of price growth in the last 12 months than Newcastle and New South Wales. We've also seen very, very strong performance in the city of Greater Geelong, just outside Melbourne in Victoria. And this speaks to one of the standout trends at the moment, that locations outside Melbourne but close to the capital city have been the outstanding markets in Victoria in the last 12 months. Cardinia Shire, which is just outside Melbourne, down in the far south east, locations such as Pakenham and Officer, very, very strong markets, with price growth in the towns of that region up at least 15%. Officer is up over 30%, and Pakenham more than 20%. An indication that sometimes you can find the best growth prospects outside the capital cities, and the great benefit for investors is that the buying prices are much lower and the rental returns tend to be much higher as well. I also refer in this edition of Terry's Tips to some recent media suggesting that the correction in Sydney prices is over and that prices are going to start booming again. This is based, as is often the case with media, where there's a lot of misinformation reported in our major newspapers, particularly when they focus on month-to-month changes in price data, which is always very, very misleading, too short a time frame to actually get a clear trend of what's happening with prices in any market. But the latest monthly figures show that the rate of decline in Sydney prices, which has been something that's been a trend for the last 5 or 6 months, the Sydney price is correcting after 4 years of boom. But the latest month, March, showed only a very small decline, and media suggested this meant that the correction in Sydney prices was over and prices are going to start booming again. I think this is very false reporting. Usually what we see after a prolonged price boom, we've seen this throughout recent history, is that we have a period of 12 to 18 months when prices correct, only minor correction usually, and that's what I expect to see this time in Sydney. Prices coming down a little bit, but not significantly overall. but it usually is a period of correction that lasts at least 12 months and probably a little bit longer before the market balances out and we get on to the next cycle. So don't be misled by those sorts of headlines suggesting that Sydney's suddenly going to start booming again. I don't believe it's going to happen. Another article in this month's edition of Terry's Tips talks about the time that it takes for changes in local economies to translate into activity in the property market. As I said earlier, it's all about the local economy. Where's the local economy growing? Is the local population growing? And are jobs being created? Because that all translates into demand for real estate, and out of strong demand for real estate comes price rises. Now, an example that I quote in this snippet in this edition of Terry's Tips is about Townsville, North Queensland. This is a market we expect to show growth in coming years, but if you look at the current statistics, it's a place you've got to avoid because the current statistics are negative. But what we've seen is that the economy is improving, and out of this comes significant improvement in the jobs market, but it's not yet translating into sales and price rises in the market. But I'm saying not yet, because it takes time for that to filter through. I do expect Townsville to be a growth market, but if you look at the current statistics, you'd be turned off. But we're always looking to the future with what we do at Property U, and we do expect, because of the major infrastructure spend that's underway in Townsville and the things that are still to come, that more jobs will be created, lots of economic activity, and out of that will come real estate demand and rising prices. So those are some of the highlights in this month's edition of Terry's Tips. Please go to the Property U website and be aware of the vast resource of information. So there are articles, fact sheets, and how-to guides on a range of subjects, places that you should be considering for buying, places you should be avoiding, and all sorts of other information that will help you to be a better educated property consumer and investor. And hopefully through being better informed, you will become more successful. That's it for now. It's Terry Ryder from Property U signing off. Talk to you again soon.